Bitcoin Summer is finally live on Neutron, bringing real yield opportunities to Bitcoin. In today's conversation with 𝗬𝗵𝘁, the co-founder of Neutron, we will dive in all things Bitcoin Summer and how you can participate in their latest campaign and earn yields all the way from 5% to 70% by either just depositing Bitcoin into their very conservative maxBTC vaults, which will earn you somewhere between 5 to 10% yield. And for the little bit more degenerates out there, we also dove into the concept of leveraged Bitcoin looping and how this strategy works so that you can achieve yields up to 70% on your Bitcoin holdings. Furthermore, we talked about Megavaults and how this product ties into Bitcoin Summer. We discussed their recent Neutron Rebranding and much more. And now enjoy my conversation with 𝗬𝗵𝘁. So now that Bitcoin Summer officially went live on Neutron, and for the first time you guys bring real yield opportunities to Bitcoin holders, why don't you tell us a little bit more about what Bitcoin Summer is and what it brings to the table?
Yeah, sure. I think, the context is there has been a lot of demand for being able to generate yield on Bitcoin holdings, right? Like more and more people have been accumulating Bitcoin, and so like getting that efficiency gain of not just like holding the Bitcoin, but getting more Bitcoin over time is something that like more and more people have been looking for. But it's actually really difficult to do properly because contrary to other assets, like Ethereum is like a proof of stake chain, and so like the yield is kind of like baked in, right? It's just like inflation. Bitcoin is by definition like different, and so a lot of people have tried to do this at scale, and a lot of these approaches have failed, right? Like people tried like the centralized systems of like BlockFi and Celsius and stuff. That didn't work out too well. They tried just naively kind of like integrating Bitcoin derivatives into existing ecosystems like Ethereum, and the yields just were really low because there were no demand for borrowing or getting these assets, right? For that to happen, you need to have like a trade, a reason for people to use these assets in DeFi, right? And we think we've figured how to go about this in a way that's like both secure and scalable and sustainable. And this is like what we call like, maxBTC, which is a new product that's being introduced by a company called Structured onto the Neutron network. maxBTC is a yield-bearing version of Bitcoin. It's like Bitcoin plus 10% APR, simply put, which is really, really attractive. And especially because introducing this asset into a DeFi ecosystem like Neutron creates a bunch of like really unique opportunities and valuable trades, right? For example, there are, the mental model is kind of like the following, right? Like there's different participants in a financial market. Some of them are like more conservative, right? They don't want to take too much risk and they're okay accepting lower rewards. And some of them are really degen, right? And introducing this maxBTC derivative into Neutron means that we can now offer the right products to all of these guys, right? So for example, if you're very degen, what you probably will want to do is you will take maxBTC and you will use it as collateral. You will borrow more Bitcoin and you will mint more maxBTC, and you'll do this multiple times, right? That's called leverage looping. And with leverage looping on maxBTC, you could get yields that are pretty crazy, like 70% APR on Bitcoin before incentives, right? Which is just like insane. It's never seen like in the industry so far. And it's legit, right? And so that's really interesting, but you're taking some risk, right? You're taking liquidation risk and you're taking like, some leverage and such, right? If you're really conservative though, the good news is that now, you can lend your Bitcoin and you can earn the fees that the degens are paying to borrow your Bitcoin, basically, which should be way higher than what you are currently earning on like Aave and such. And so, yeah, that's kind of like the 𝗬𝗹𝗹, right? Like we have invested a lot of resources into helping this company called Structured like come to market with maxBTC, and we're building an ecosystem around that product that allows us to, actually effectively unlock the most appealing trades on Bitcoin, such that people can, find the right opportunities for their preferences, right? So like, yeah, that's the way that I would put it, if that makes sense.
Yeah, makes a lot of sense, and I think it's also a very compelling product that you're offering here. Most of us in the industry, we all hold a little bit of Bitcoin and it's just sitting idle in our wallets, and now finally you offer us the opportunity to yield, to earn some yield on top, which is something that never existed before, and probably also, I don't know, these Bitcoin debts might look into, as they're trying to increase their Bitcoins per share.
Well, I think that's a great thought. Like, we'll see how that pans out. It's too early, I think, to like make a strong point on this, but this is definitely an area that we're exploring, right? In the sense that as there's more and more competition now for like owning the largest possible share of Bitcoin in circulation. And so we expect these participants, as the competition becomes more and more aggressive, we expect these participants to start taking, all of the optimizations that they can, and being able to generate yield, especially meaningfully high yield at scale on their Bitcoin, is like one of the ways that they can like get a strategic advantage over the other companies in terms of how much Bitcoin per share they're able to like acquire and how much time effectively. So yeah, that's actually a really interesting like dynamics that might play massively into maxBTC's favor, if that makes sense.
Cool. So you're probably already in touch with some of these debts, probably not MicroStrategy, because I think he just wants to accumulate Bitcoin and just never sell it. But there are other smaller Bitcoin treasury vehicles that might come from another angle, and it probably offers some yield to their users. So yeah, can you share there a little bit if you're already in talks and what your strategy?
I would say like, so first, Structured is, like I work on Neutron. Structured is a company that's like coming to market in the ecosystem. So we work really closely with them to like help them go to market, but I'm not in charge of these conversations for them, if that makes sense. It's more so I think the thesis is really interesting. And I know that like anybody who's interested in getting yield on Bitcoin anyway, like Structured is talking to, if that makes sense. So that's something that, I'm sort of like assisting with. But what I focus on is more so taking, Neutron's primary value proposition is like we build both the chain and the smart contract layer on top for the specific purpose of maximizing the capital efficiency of these things. And this is why it makes sense for assets like maxBTC to go to market on Neutron, because we're able to offer higher leverage, higher capacity, more like cheaper, more concentrated liquidity, that kind of stuff, right? Those are the fundamental innovations that Neutron brings to the table. And the value of these innovations is that, one, it allows the LPs, so anybody who provides liquidity to these assets, to take less risk and have higher upside. And two, it allows folks who want to take on leverage to have more capacity, lower fees and such, right? To have more efficiency on their positions effectively. And so all of these things kind of compound into enabling asset issuers like maxBTC to benefit from as much demand as possible effectively, right? So it's kind of like a virtual cycle, if that makes sense.
Yeah, so let's shortly double click on Structured. Try to help me understand. So the way I understood it, please correct me if I'm wrong. So Structured is this Bitcoin protocol built on top of Neutron, or like how does it tie into Neutron?
So Structured is you can think of it similar to Ethena. It's like kind of like Ethena on Neutron and for Bitcoin, right? So what it does is it's a set of smart contracts on Neutron that contain an oracle, a minting contract, and a few other things, and deep integrations into the Neutron DeFi ecosystem. What it does is it accepts Bitcoin deposits and take these Bitcoin deposits and then allocates them across a set of strategies. The first strategy is a JLP hedge liquidity position, right? So the TLDR is that Jupiter, the perpetuals exchange on Solana, has a lot of trading activity, which generates a lot of fees. By depositing Bitcoin into JLP, the protocol is able to earn fees. But there's one downside, which is that the JLP pool has multiple assets in it, right? It has Ethereum, it has Solana tokens, it has Bitcoin, it has USDC and USDT, right? But we only want exposure to Bitcoin in the case of maxBTC, right? So what the protocol does is it uses the collateral that it has on Cephu, which is a custodian, to trade on Binance in order to hedge out the exposure to any other assets, right? So it shorts Ethereum and Solana in order to remove that exposure, and it longs Bitcoin in order to achieve a 1x long Bitcoin, right? So it's a similar playbook as Ethena. Ethena does the same, but with Ethereum effectively, and they short Ethereum in order to be delta neutral. But in the case of maxBTC, the goal is to be long Bitcoin and to get the trading fees. So the trading strategy is slightly different. And then while that's happening in the background, on chain, what you do is like to the user, what happens is simply you deposit Bitcoin, you get max BTC, and you can take that token and use it anywhere in DeFi, just like you would with an LST like stake ETH, for example, right? And that's kind of like the value add, which is that not only do you have a strategy that only was accessible to hedge funds before, right? Like, I personally don't have the sophistication to like build an entire like trading the facility to like carry out that trade and make sure that I'm doing it really, really accurately. But that's what the protocol offers, right? Like there's professional quants that are like building these things and that are making it available to anybody, right? So value proposition number one is it's democratizing this really great strategy and making it available for anybody to benefit from. And then value proposition number two is that by tokenizing it, you now get access to liquidity. So you can enter and exit your position via the public liquidity much more effectively. You don't have to like wait for multiple days and that kind of stuff. And you can take on leverage, right? So you can use this asset as collateral. You can borrow more Bitcoin, deposit more and stuff, and like you can leverage up your position in order to increase your risk, but also your rewards.
I love this analogy, the Ethena of Neutron. That helps to clarify things. And like now, probably to address the elephant in the room, it's cool to generate yield on your Bitcoin, but what are the sources of that yield? I saw that you guys made a public post, and there you mentioned 3 main sources of yield, which the first one is like the real yield just generated by the trading fees. And then on top, you add some Neutron rewards, and there might potentially be some partner airdrops, or like partners are adding some rewards on top. So yeah, can you please just tell us a little bit where those yields come from and how high they can potentially be?
So that's a great question. Basically, so for context, right, we launched this campaign called Bitcoin Summer, and Bitcoin Summer is an opportunity during which max BTC is becoming available, and we're working with all of the leading players in the Bitcoin space to sort of like bring their assets to market, like bootstrap liquidity, lending supply, and such, and like build an ecosystem of Bitcoin finance. Right now, as part of this campaign, there's a bunch of different opportunities, and so these different opportunities will have different reward profile. But generally speaking, there's a few categories of sources of yield. One, as you said, there's like real yield category, right? There's 2 things in this category. One, there's the underlying asset yield. In the case of max BTC, we just talked about it. It's like the trading fees on Jupiter and there's like the funding rates from Binance, right? There's also, in the case of the LSTs, like Lombard, for example, you have like the staking APR of like Bitcoin staking that Lombard does with Babylon, right? So that's the assets yield, right? So the assets that are being used in these DeFi positions can generate yield. And then you have the positions themselves. For example, if you're lending, real yield includes the lending rate, the lending APY that you're getting on top of the asset that you're lending, right? If you're providing liquidity to a super vault, you are earning the spreads, e.g. the trading fees, simply put, on people who are trading these Bitcoin assets, which is used, like because super vaults are integrated with Skip API, anybody today who's buying or selling Bitcoin on abc.fund is probably using the liquidity on Neutron right now, right? So that's the other like source of yield, right? So that's for the real yield. On top of this, you get Neutron incentives, like Neutron rewards from the campaign, as you mentioned. You also get potential like structured points, which I don't know the value of these of the points, but that is being distributed as well. And likewise, you get other partner rewards depending on which position. So if you deposited to a position that has Lombard BTC in it, Lombard is distributing Lux to you, which is their flavor of a point, right? And likewise, same thing for Solve, and same thing for Bedrock, same thing for Ethereum as well. And so depending on your preferences and which assets you like the most, which type of positions you want to take, and how much risk you're willing to take, the risk reward profile that you'll get, it will be very different, obviously. Going from anywhere to like basically you could be just lending, in which case you'll be pretty conservative, but you should be currently, if my recollection is correct, I think the current APR for this is like above 10%, which on Bitcoin is really huge. But if you want to go and like take more risk and like leverage loop and stuff, like you might be looking at like way higher APR. It all depends on your risk tolerance and the kind of positions you want to take and the kind of assets you want to be exposed to, right?
Yeah, cool. So yeah, let's shortly double click on leveraged looping Bitcoin. So what you're doing is you deposit Bitcoin into the maxBTC vault, right? And then you lend against this position, add more Bitcoin, and that's how you loop it.
Yeah, I think the simplest way to do this is you can buy maxBTC, on the Neutron exchange right now, right? There's pretty deep liquidity for it. So you buy maxBTC and then you deposit it, you lend it on Ember, which is this like isolated marketplace, like lend and borrowing that's dedicated to like focused on Bitcoin. So you use maxBTC as collateral, and then you borrow another flavor of Bitcoin, which could be 𝗪𝗵𝘁. That's a pretty deep market right now, like notably thanks to the Quarks treasury and a few other participants that have provided a lot of lending supply there. So you can borrow 𝗪𝗵𝘁, and then you can buy more maxBTC, and then you can do that again and again. But that's pretty cumbersome to do by click, right? So what Ember offers is it has like this like strategies tab. If you go there, you just pick which asset you want to borrow, and it will automate getting to the leverage that you want, right? So if you want, I think the maximum leverage possible is 11 to 12x. I would need to check, but I think it's like in that range. So let's say you want 10x leverage. You just like select 10x, you deposit your collateral, you click, and basically Ember will automate doing all of the trades such that you get directly to 10x leverage, and boom, you're earning 10x the maxBTC APR minus the cost of borrowing, if that makes sense.
Wow, cool. Yeah, so that's probably for the more advanced traders, but I think just depositing into Bitcoin vaults is a pretty straightforward, folks, for the normal crypto user, and they should definitely try it out, at least with a minor position, to get a general feeling, right, of how all of this works before they...
Yes, absolutely. Like in general, it is very advisable to like only use leverage if you know what you're doing. I will say one thing that is like important to understand is that leverage here is very different in terms of risk profile compared than say like trading perps on leverage, right? Because you're borrowing an asset that is correlated in price with the asset that you're using as collateral. Your risk of liquidation is way lower, right? Because the only reason why you should get liquidated is if one of the assets basically depegs from the price of Bitcoin, which can happen, which is a real risk, but is way less likely than just perp trading or that kind of stuff, right? So I would say it's actually not that complicated to do, but you're right to say that like people should go and explore the ecosystem at their own pace, make sure that they understand what they're doing before taking any actions. One thing that I think is useful to know is, Neutron has community channels, notably on like Telegram and Discord, and we're pretty active there. Like we're always open to answering questions. The Bitcoin Summer campaign is like pretty huge, actually. Like there's a lot to learn about it. So if there's anything that you don't know about or that you want to check and such, like just reach out to us. Like we're always happy to like answer questions and such.
Yeah, cool. And yeah, talking about participating in Bitcoin Summer, like who is able to participate there? I saw that Cosmos native folks can onboard there, but you also established a bridge so that Ethereum assets can flow in. So tell us a little bit more about onboarding and how users can take advantage of this current campaign.
Yeah, I think that's a great question. I would say there's generally two paths. If you're already an IBC native, like user, like for example, you have funds on Neutron itself or on Osmosis or other chains, you can just use your traditional like 𝗪𝗪 and like or Cosmos Station or Leap wallets, and you can basically onboard. Go to the position tab on the Neutron app, which is app.neutron.org. You'll see the Bitcoin Summer tab. In that tab, you'll have positions on Neutron, and you can see all of the positions in the ecosystem that are available that are getting the rewards from Bitcoin Summer, basically, and you can choose which one you prefer, right? And so then you can just deposit to it. If you need to move your assets to Neutron first, you can just use the bridge tab to just like select what Bitcoin you have and the Bitcoin you want to get on Neutron, and will help you bridge basically to like straight into the ecosystem. So it's pretty straightforward if you're already like onboarded to IBC, let's say. Now it would be a lot more complicated for Ethereum users, but that's something that we wanted to make sure would be as easy as possible. And so we've worked with the Valence protocol and team to build non-custodial vaults that allow you to deposit straight from Ethereum and to automate basically all of the bridging logic and such, right? So you deposit one asset onto Ethereum, we take that asset, and the vault itself basically bridges it using 𝗪𝗪 all the way to Neutron, deposits it in DeFi, and then whenever you want to withdraw, you can basically request a withdrawal, which will be processed on Neutron, so you'll get your assets on Neutron at the end of it, which helps you like onboard and fund your wallet and such. One important thing to note about the campaign as a whole is that it's working on a model where there's phases that are each 2 months long, And the goal is for there to be at least 6 phases. So like, this is going to continue running for like an entire year. But each phase has its own reward budget. The first phase of the $10 million that have been committed by the Neutron DAO, the first phase has 250K, so like a very small portion. But it is, going to we're going to increase every phase effectively. And what's really interesting to understand is 2 things. First, because the rewards are distributed per day, that means that at the very beginning of the phase, the rewards tend to be really juicy. So getting, being one of the first movers there can be really profitable for users because you're competing with fewer other people for all of the rewards effectively. So moving early can be really, really rewarding. And the second thing is the campaign operates on a forfeitable model, or some people call this like a soft lock, e.g. we never lock your asset. You can always withdraw from the protocol and the positions. But if you withdraw before the end of the phase, you will lose the Neutron rewards. You'll keep the other rewards, but you'll lose the Neutron rewards effectively. So make sure that you pick which position you want to be in carefully so that you're comfortable staying in there for like 2 months. And you can change every 2 months effectively to make sure that you don't pick a position and then like halfway through there's like something better that comes around. We try to only add positions in between the phases. So you get to, choose like if you want to update your position or not, and not lose any reward in doing so, if that makes sense.
Yeah, thanks for clarifying that. And I've come across like some posts or screenshots on Twitter lately where people were sharing the rewards they made on those Bitcoin pools, which were pretty impressive. And as you said, the earlier you get in, probably the higher those rewards are. And like just a few weeks ago,
I mean, some of these have been pretty insane. Yes, like we have seen some community members like really make bank with this. But as I mentioned, like this is like the same thing should be happening at the start of every phase, which means that right now it's still like it's not too late. Like you're actually really early in the campaign, so it's a good time to onboard. And if you onboard right now, like you might be among the first ones for the next phase, which will start like in November, I guess. Which means that like on those first few days where like the higher budget starts being distributed, like you might be the one making bank and sharing it on Twitter or something.
Yeah, cool. Because as you said, 10 millions of rewards have been allocated to this campaign, and currently there are 1.5, probably a little bit more in deposits. So yeah, if you just do some quick maths, the APR should be high.
Well, as I mentioned, the current phase has 250K of rewards, not 10 million. The 10 million will be distributed across the entire campaign, which is like a year long.
Cool. And yeah, probably as we think about wrapping up this conversation, I wanted to ask you how the Neutron Megavaults tie into Bitcoin Summer. Like that's a very cool project that I myself played around with in the past. Like I used it just to generate some yield on TIA or on Neutron tokens. So is there a connection between the two products or not really?
Yeah, no, there is absolutely. So as I was mentioning earlier, the thesis is that we're trying to unlock, like if you look at DeFi today, like the vast majority of the DeFi activity is one trade, and that trade is leverage looping on ETH, right? We see it for ETH, we see it for a few other assets like Sol and others. But Bitcoin, despite being the largest asset in the industry, like we haven't unlocked that yet, right? But there's no reason why like people wouldn't want to do it. It's actually even more appealing with Bitcoin, right? It's just that we didn't have the right infrastructure in place for it, right? We were missing like a yield-bearing real yield asset, and we're missing like the liquidity and the lending supply that's required for that trade to exist, right? And so this is what we're focusing on unlocking, right? But because you need liquidity to be able to enter and exit these positions, the way that you manage the liquidity is really important, right? So if we were using 𝗪𝗧 pools or like really antiquated infrastructure, the capacity that we would be able to offer would be really, really limited, and LPs would be losing and leaking value basically like a lot, right? The pools wouldn't be competitive, they wouldn't capture a lot of volume, they would offer poor prices to traders, they would leak value to LPs, and the leverage capacity would be limited. And so the role of supervaults, which are kind of like these very advanced market-making protocols that are designed to democratize the profits of market making, what they do is, one, if you are buying or selling Bitcoin, you get really, really good prices on it, right? You get the price of Bitcoin with very tight spreads, kind of as if you were trading on Binance, right? Like that's the value proposition as a trader. You get Binance prices, but on chain, right? So that's number one. And then to the LPs, e.g. to the people who provide the liquidity, you get protections against what is called adverse selection, which is the fact that when you have like passive pools like 𝗪𝗁 pools, what will happen is that the pool slowly gets out of sync with the price in the market, and so it starts, quoting the wrong price, right? Like it's buying and selling basically at the price of Bitcoin but 10 minutes ago, and now the price is different, right? And so as a result of this, there's people who are just like standing by, waiting for the pools to give the wrong price, and when they're giving the wrong price and they know that they are going to win 100% of the times, they trade against the pool, which is arbitraging. And this is like the greatest psyops in the industry. Like a lot of people have said like, oh, thank you, the arbitragers, because like they help us like keep the price in check, like and updated on the pools. But no, they're just leaking value. So instead, what we did is like we built a better type of pool that makes sure that like that is not required, right? Like the pool itself updates its pricing properly, and that allows the LPs to do two things, which is one, they're protected, they're not exposed to that risk anymore, and two, they can be a lot more aggressive with how they like concentrate the liquidity, which means that we're able to offer like tighter spreads and deeper liquidity like reliably, effectively. And then the consequence of these two things, better prices for traders and better protections for LPs, the consequence of this is that the lending and borrowing marketplaces like Mars and Ember, they can rely on better liquidity, more capital efficient liquidity, which means that they have the certitude that they can liquidate effectively, right? They're not going to lose 30% on liquidating and such. And so they can be more aggressive with caps, which means that down the line, the strategies like leverage looping and such are more efficient, which means, you're able to make more money, you're exposed to less risk, that kind of stuff, right?
Yeah, makes sense. And there are also a lot of moving parts involved. I mean, just the list of partners that are contributing in this Bitcoin Summer campaign is like super long and impressive. I mean, there are folks like Lombard, 𝗬𝗪, Bedrock, Wrapped BTC, Babylon. So yeah, tell us a little bit how all of this came together. And I guess you're really the first probably cool product or user-facing product that all these Bitcoin LSDs can integrate with, and so it's a win-win for both, right?
Yeah, the idea is that it comes back to this idea of like there are different participants in a financial market who have different preferences, right? And so some people want to be really risk on, so they leverage loop, and when you leverage loop, you're borrowing other assets, right? But because you're borrowing, you're paying to borrow, right? Which means that the more that trade scales, the more lending yield there is for other participants who are more conservative, more risk averse, right? And so, this entire campaign, it's kind of like a boon for everybody because everybody is looking to generate yield on their assets, right? Lombard and 𝗬𝗪 and Solve and such, sorry, the gas water, like everyone's looking for yield on their assets. And so by unlocking that trade of the leverage looping on maxBTC, we're generating a lot of borrowing demand, which means a lot of yield for people who lend these assets effectively, right? So it's kind of like a win-win-win. It's like creating an ecosystem where you have like different assets, different participants, different protocols, and like a few trades that are really, really profitable that sort of like help create a healthy market effectively.
Cool. So to come to a conclusion of this conversation, along with the Bitcoin Summer announcement, just a few days before, you announced the rebranding of Neutron, I guess, to more align the Neutron brand to Bitcoin. So give us your thoughts on the Neutron rebranding.
Yeah, I think it's the culmination of multiple things, but the more important one I think is, we put together Neutron's brand in like a day back in the days when we were launching, because what we were focusing on was, as an early company, we were focused on let's get products out there. We will polish things like later on. What we first want to do is like put the products out there, start iterating, start testing with users and such. And so we've invested like 2 years in refining our products, and we feel like we've built meaningfully innovative products now, like 𝗪𝗪vaults and other things that are actually providing a lot of value. And we want to make sure that we're able to like bring these services to the best and largest markets, so Bitcoin, but also to the best and largest players, basically to everyone, including the best players, right? So like that requires a degree of professionalization and professionalism that we are, as a company growing into. And I think like the rebrand is also like one way of signifying that, we want to show our A game to everything that we're doing, and like we're a legitimate partner and and company to work with effectively on some of these things, if that makes sense.
Beautiful. All right. So yeah, is there anything else that you wanted to share with our community that we didn't touch upon, or any final words, call to actions?
Yeah, I think I think it's a really exciting time on Neutron now. The thing that's like important to understand is like there's a window of 2 to 3 weeks right now where you can mint maxBTC before the protocol fully launches, right? So this is like what we call like batch 2. It's the first time that you can publicly mint maxBTC. Until that window of time is finished, maxBTC is not yield bearing yet, but this is like the only chance for you to like actually mint it. As soon as basically like in 2 weeks, like the protocol will take all of the funds and will deposit it into the strategy, and it won't be possible to mint maxBTC anymore for a couple of months until the full protocol launch. And so, this is interesting and important for 2 reasons. The first one is there's going to be like a bunch of opportunities around maxBTC that are currently like only available like now, and that are going to get like unlocked when the asset becomes yield bearing. So it's a really exciting time because there's a bunch of strategies that you can sort of like come up with. So yeah, I encourage everybody to like explore the Bitcoin Summer campaign and the ecosystem, and look into maxBTC and potentially like minting some or buying some on the DEX, which is even easier to do. Because like the whole thing is like rich in alpha, in the sense that like the more you understand about the campaign, the better you can play. So feel free to go and like ask questions in our community chats and such. Like we're trying to be like really hands-on and making sure that like everybody has like the full context. I think it's a unique opportunity both on Neutron and as a Neutron user, as well as like just for anybody who's interested in Bitcoin. This is like a first in terms of like the opportunities that are available for the asset, if that makes sense. So yeah, I think it's a really enthralling time, if that makes sense.
Yeah, I agree, and I highly like encourage or invite everybody to play around with the Bitcoin Summer campaign. It's pretty straightforward, the onboarding process, etc. So yeah, thank you very much, 𝗬𝗺, for jumping on and like outlining your vision and just everything that's cooking in the Neutron ecosystem. Thanks again, and yeah, enjoy the rest of Korea Blockchain Week.
Thank you. Appreciate it. And thank you for having me on. I hope that, that'll be interesting to your community and audience. And, as I said, if we can do anything to help, like, reach out to us. Like we're always happy to chat.